Hey, everybody. Good afternoon. Welcome from 12-Minute Trading. My name is Doc Severson. I've got Dave Lukas with me here. Today is Monday, the 12th of June, and it's been a couple weeks since we've gotten together with you guys. So welcome aboard. We've seen a very positive market so far in the first half of this year. 6 months ago, we weren't sure if we were out of the bear or what was going to happen, and I think everybody was predicting the most obvious recession in history, and I wonder if we're going to avoid that. But seriously, we have the NASDAQ going insane right now, driving the S&P. We have other indices which are sort of in the, not everybody is pulling on the oars right now. So this is really the NASDAQ show, just like the old times, right? Just like 2017 again. And so there we go. I mean, Dave, what are you seeing in the market these days?
Well, first off, it's nice to be back. I spent a couple weeks out in Hawaii with family and had an Ironman out there, and
Nice.
it's a totally different world trading from there. The market opens at 3:30 a.m., so getting up at 4 a.m. to check in on things, and then it's nice the market's closed by 10 a.m. You got the whole day to do all the fun stuff and everything else. But it's been interesting watching this market over the last couple of weeks just from afar. I've been trading each week, but most of my stuff's pretty passive. It's pretty 10% plus out of the money trades, things like that. But I've been having to deal with, you mentioned the NASDAQ. I've been having to deal with a couple trades that I've had on that when I placed them, I was 1,800 points out of the money, and this thing has come up to within my, levels of threshold to where I got to start doing defensive maneuvers and stuff. And so I was looking, this NASDAQ, the NDX specifically, has gone up almost 2,700 points on this move. That's, one of the largest swings ever from a weekly swing. And so now we're at this position, and I think we'll show this in the charts, where we've got a pretty exhausted weekly chart on the NASDAQ. And if you look at, when that happens, you get pretty big pullbacks from that thing, right? And so I actually put out a short while I was out there saying, hey, I thought maybe that pullback last week where it was, I think it pulled back 200 to 300 points. I thought that was maybe the beginning of it, but it's a great lesson in that markets will run as far as they can in one direction and then turn around and run as far as they can in the other, but they will go much longer than you think they can and that most traders can bear. And I think that's what we're seeing right now. The NASDAQ is, where's the pain trade? Everybody's expecting it to go down. In fact, we were talking before this, I think, coming into this month, most of the hedge funds were net short, right? And so I think we're seeing some of that unwinding, but this is a pivotal week. We got the Fed, we got CPI. I think we'll look at charts in a second and talk about CPI. I think CPI is going to come in under or in line. I don't think you're going to get a massive jump in CPI. I think the Fed's going to pause. I think that's baked in. So all this stuff's kind of priced in. So is it that we do see a sell the event? Do we see people do profit taking off of that once they go, whoosh, okay, everything we thought's true, so we do some profit taking? Or does that spur this thing on the last kind of blow off top move for this swing? This is clearly euphoria in the market cycle for this, current move and swing, right? So I think the next couple of weeks into the end of the June are going to be pretty interesting.
So I've been thinking quite a bit about this lately. Like, what could move markets this week? What could move markets in a negative fashion this week? What could move markets actually further positive this week? Because either could happen. And if I think the CPI is going to be particularly important tomorrow morning because it represents retail, although we can't discount the PPI because it's more of a leading indicator for, downstream consumer inflation. And they're expecting a negative month-to-month print on the PPI on Wednesday morning, so that's going to be huge. But I'm thinking that if the news is good from an inflation perspective, then what that means is that the Fed pause is warranted and everything plays into line. And I think the market's got nowhere to go, right? I think a lot of this has already been priced in. I think this move has been priced in for a good print. And so if it's actually, so that to me signals, if we get everything lining through, we may get a little intraday, pop to the upside or a gap up actually. but watch
Mhm.
for the reversal. Watch for that early reversal in the day, I would say, like around 10 o'clock or something like that. The market gaps up and then all of a sudden it starts, you can see the internals start heading lower. Now,
Yeah.
if we get really hot prints, what that means is the Fed's going to pause anyway. We kind of know that because I think at this point, this Fed works really well to telegraph what they intend to do, and then they don't disappoint. But what that's going to do is that for July, almost 100% chance of late July hike. And I think the market actually, I think surprisingly, if the CPI PPIs are hot, I think we're not going to necessarily lose it to the downside. It actually may just stall out for a while. So it's going to be kind of the opposite reaction to what most people expect.
All of the things are there, especially on the NASDAQ chart, at least for a pause to a 3 to 5% pullback. And that would actually be extremely healthy to keep this rally going. Like, you think back to 2021, and these are moves like what we saw in 2021 before the bear, where the NASDAQ just kept leading off. And then in November, we kind of had that blow off top, right? And we're seeing very similar type movement to that. And along the way, though, we had 3 to 5% pullbacks. And that's really healthy to keep going. If we just keep going up parabolic, it just makes the pullback that eventually comes just much more violent and much worse. It's actually a lot healthier to get these 3 to 5% pullbacks when you get a weekly chart that's exhausted and you've done 2,700 points, that sort of thing. So it's absolutely doesn't have to. I mean, again, we can have a blow off top from here, but I'm kind of agreeing with you. After this week, what does the market really have to go on, in the sense that everything's priced in, right? Everything is priced in at this point. So I think if we do get a massive move lower, it's going to only come from something that is completely not priced in. It's a blind side to the market. I won't call it a black swan, but like a blindsided piece of news or something that comes out, another bank failure or something like that hits the tape, or something that really shocks things. Otherwise, maybe we get a 3 to 5% pullback, that dip is bought, and we continue on.
So I think this is extremely important. What has occurred over the course of the last month has been, we're seeing a transition to a different form of market character. So,
yep.
And really it changed around the beginning of the year, around 2023, because if you look at, let me throw up the chart here, but if you look at this market, we had what's called, typically this is volatile and trending. So it's extremely heavy volatility, heavy trend to the downside. So we don't see this, but only in bear markets. And actually, for the pandemic move, that was not a bear market. Most people are calling that a bear. That was not a bear. That's just a quick, nasty correction. That this was an absolute 100% bear. But what you're seeing is, since the beginning of the year, we've gone into breakout or consolidation and breakout. And we're moving in a completely different fashion. All the breakouts failed before. Every single breakout before was failing. And now the market's moving in a completely and totally different environment. So people, we notice this all the time, is that most retail traders are trading the last market, or trading last year's market, right? Trading the past market, because they get in the mode of it and they get in sync with it, and then they finally understand what's going on. And right around the time that they understand it, it switches. And it has switched at the beginning of the year. It was like for the S&P, there was some doubt as to whether, boy, are we going to break out above 4,200 or not? Well, we sure did. And so far, it's not retested. We have switched character. There's no question that we're in a new bull. So a lot of people out there on Twitter are like posting charts of 2002 showing every 26% rally gets killed and gets killed. Now, it could happen, but I don't think so at this point. I really doubt it at this point. So unless something exogenous comes along where all of a sudden, we get drawn into World War III or some other, some other factor.
It's got to be something that is just massive and not priced in.
Right.
And like the CPI, the PPI is a little different, but the CPI calculation, honestly, everybody watching, is a joke. Okay. So it's not, It's going to be lower only because it's comparing last year to where things are now. And so what we basically did, if you think back, like before all this inflation started, prices were here, right? Whatever they were, eggs were 69 cents for 12 eggs or whatever that was, right? Now we've set this bar up here. This is where our prices are. Okay. And they're not coming down. They're staying at the bar. But what happened is prices came up, right? And we're here. And so now we're comparing to right here to right here. And we're saying, oh, well, prices aren't going, you know, our inflation's lower, right? It's coming down. It's really not. We basically were at, this was our plateau and our bar, and now we're up here, and that's where things are. That's like the new level that prices, it's the new floor under prices, right?
Right, but it's always about the rate of change of something, because the market is always trying to get that first incremental little first change to something. You know, it's always trying to be first in line to things. So that's
why the inflation numbers are going to continue going down in my book. I think you're just going to continue seeing them go lower because we're now comparing to these higher numbers, and maybe it's staying where it's at, right? Maybe it's not coming down too much,
right? But
prices are still higher, and they're going to remain higher, and they're going to continue to be higher. If anybody here has never gone and looked at the website WTF happened in 1971.com, you should. It's pretty eye-opening as to what has happened with inflation, with your purchasing power, your dollar, all that type of stuff. And it's one of the reasons we trade. Money is simply a currency, and currency has to keep moving and everything else, right? So you have to keep it working. Otherwise, it is just even getting 5%. It's not keeping up with anything.
Right.
It's it's just going to continue to degrade and lose its value. And we got 32 trillion in debt.
So right?
I was talking with somebody about that earlier.
Do you think that 5% is going to be the going rate at this point, year to year inflation going forward? Do you think we're fixed at 5%, or is it going to get worse?
I was saying, like, you can get a 1 year, treasury or bond, paying roughly 5%. But that's not enough to keep up with what really has happened to prices at this point.
In terms of price inflation, though, year-to-year price inflation, do you think we're fixed at 5% per year? Like we're in a new world of actual supply side inflation?
I think that I think it's going to fluctuate, but it's going to continue trending higher at a faster pace. And the dirty secret is the Fed absolutely loves inflation, because they're paying back the interest on $32 trillion with much cheaper money, right? The only thing with the Fed is that if you think about it this way, and it's kind of crazy, but 2% a year is the target, right? Well, you think about over a 10-year period, what 2% a year compounds into from a purchasing power loss, it's a ton. It's huge, right? But it's slow. It's small. People don't notice it over 10 years. What they do notice is when all of a sudden you go from year to year and have 10% inflation. That's when the pitchforks come out. That's when everybody gets angry. And so that's why the Fed is doing a lot of the things that they're doing, because they're like, oh crap, we're the secret's getting out too fast. We can't let that happen. We want this to happen slowly, so that we are, degrading the value of our money to pay back this interest. And so that's why they reacted the way they did. And they'll probably hold rates, where they are for some time, maybe go up a little bit more. But I think inflation will become.
Looks like we lost Dave for a second here. Dave should come back. Hey, if you guys have any questions, for those of you that are watching live, I realize a lot of you are watching this from a replay. So obviously you can't watch questions on a replay, but you can email us if you have and want questions to be read over the air for the next time that we do this next Monday. So again, if you're live with us today, there's a few of us out there. Let us know if there's something you want us to address, and we'll see if we can get Dave back here post haste. While we're waiting for Dave to come along, what I'm going to do is I'm going to walk through what I see on the S&P chart here. So yeah, Dave will be back shortly here. So the S&P chart, 4,200 was the key level, which kept us constrained for a long period of time, and that is gone as of 2 weeks ago. So now we're sitting here above 4,300, and that's that level of resistance. I'm not gonna. That maps out to last August. That level of resistance, just about 4,300. I don't give it much of a chance of holding out very much. In fact, the S&P is doing a great job. Look at all the energy that's available for trending on this chart here. This is the monthly, and the weekly still has quite a bit, and we can see what the NASDAQ has done with its energy. Again, the NASDAQ is at a weekly exhaustion. So here is the NASDAQ. It's in weekly exhaustion. We might see something like a 23.6 pullback here in the near future. We're wondering if that's going to show up, but we're not really counting on it, right? So it will show up when people stop looking for it. That's the way that markets usually operate with that. Oh, let's see. You know, what I thought we would see is a transition and some rotation from NASDAQ over to the Dow, but we're just not seeing it yet. The Dow looks to be in great position, for a breakout here. This is a bullish pattern, and I'm expecting a breakout of this. This is an inverted head and shoulders pattern that we're seeing. Like, there you go. Boom. There's inverted head and shoulders right back to the neckline. That points to about a measured move up to here, right? So that looks really good, but we just haven't seen any rotation yet. And perhaps, hey, it looks like Dave's back. Perhaps the reason for that is because we have the daily chart in exhaustion. So I keep looking for that rotation. And also the thing that we want to keep an eye on here is the Russell. We don't talk a lot about the Russell, but the Russell did violently break above the 200-day moving average and did break out of this pattern, which was a bear flag pattern. This was a bear flag within a bear flag. That is a huge weekly bear flag pattern. That was a daily pattern as well, too. And so this had the potential of just falling off the earth, and actually just at the point of maximum negativity, it squeezed higher. So we're going to watch the Russell, see if the Russell gets a bid, if some of the banking sector can get a bid, if they can get some stability back again. But overall, guys, I would say things are actually relatively positive, right? So a lot of people are very skeptical still and like, oh, this isn't real, this is going to die. I don't think so. I think the market has transitioned, and it started the beginning of the year, and what's happened over the last month has convinced me that this, and if you go back and listen to some of our videos, this is kind of the way we were leaning through the last 6 months, is like, hey, you know, everybody's bearish, so it's probably going to be breaking higher, and that's what it's done. So that's what we look at. We're not here to, we're here to be contrarians. So, Dave, any final thoughts for today before?
No, like we said, man, I agree. I think we've transitioned back to a bull. We're going into more of a quiet trending type market, and it'll just keep grinding up. And I think this move's been a little too much too fast. So I think, we'll get that pullback at some point here. But I think a 3 to 5% is what you're going to see, and then that's going to get bought and it's going to continue on. So I think that's just kind of the mode that we're in. That's at least for the time being, right? We're definitely in the euphoria stage of this specific, just the specific trend right now, right? Because the market has cycles, right? This is a shorter term cycle, but I think we're in the euphoria stage of that. And usually, euphoria gives way to the pullback, and then it starts over again and everything else. So.
Yep, and it's usually something that spoils the party, but we haven't seen anything spoil the party yet. And actually the news hasn't been all that, like, what I would consider to be great. It's just what's happened, really. AI is the big trigger of what's happened, and a lot of people are having flashbacks back to 1995 and so forth, where... Yeah,
I mean, fundamentals are terrible. Like, if you look at the macro fundamentals in the economy, they look not very good across the board, but the market's not the economy. Always remember that. So it's the market's going to, price is king. This is where price wants to go. You can't get mad at it. Like, I've got call spreads that I thought were no problem. I've got to manage those and stuff, right? Put spreads are doing great. But the call sides I'm going to have to manage now, and I can't curse it. Just is, hey, this is what it is. And, this is what the prices tell me it wants to do. So the trades I start to put on next will, take advantage of what the market's doing, right? And that's just how you got to do it. I think that's the big thing is, don't trade emotionally. in a market that's running like this. Just be methodical, keep emotion out of it, be logical, and just manage things that you need to, and take advantage everywhere else that you can.
So Steve has got a good question here for perhaps you there, Dave, because we're in a bull now. Will we start seeing you recommend selling puts versus iron condors like a year or so back?
Mm-hmm. Yeah, we'll move back to the old school stuff of like 10, 12 delta, put spreads and all of that, and just let these things run away from it. And even 3 to 5% pullbacks, you're again, you can sell those, like you take like the NDX, you can sell 1,500, 2,000 points out of the money and get a nice return, and just let it keep doing its thing, right? Why step in front of a freight train, right? I had a couple trades get caught in this, which is, I do them every week, so that's going to happen. But overall, the rest of my trades are doing well. But yeah, moving to where we're just switching back to that old school bull market trading that, just worked so well. We're just going to go right back to it.
Outstanding. All right. Yeah, I'm looking forward to selling puts again. It's been quite some time since I've just outright sold puts for my portfolio, and so we kind of suffered through that collectively in 2022, where but actually, like I sold puts against AMD at 95, and I took some heat on that for the better part of a year, but I held in there, just kept selling calls against it. If you don't panic, it still works out great. So it's knowing when to lighten up your portfolio.
I would just love to get that 3 to 5% pullback and sell those next trades into that, right?
Oh yeah.
I hate selling them at the top, even though they are going to be all right. It's just you sell them there, and then you got to stay in them longer because the market drops back down and goes back up. So if we get a nice little drop, that's where I really like to sell those things into. Contrary, actually, technically you should be selling call spreads right now, like on the NDX, way the heck out of the money. It feels horrible, but from where things are at, like that's kind of the trade right now if you want to take advantage.
Yeah, I'm still looking forward to. I'm green light to set up naked strangles on the micro E minis, but I can't do that until. I mean, right now with the implied volatility, in the gutter, I literally cannot do that until we have some type of pullback. So there's so many people. Yeah, there's so many people waiting on a pullback that quite often usually does not come until people quit looking for it. So great question, Steve.
They throw in the towel.
Yeah, great question. Okay. Well, thanks everybody. We appreciate you guys joining us here on Monday the 12th. And here's the summer. And this was supposedly the sell in May and go away, and we went sell in May and go higher. So there you go. All right. Thanks, everybody. You guys, appreciate you joining us, and we will see you guys next Monday. Adios. Bye now. All right.